Hello, everyone. Welcome back to the RationalInvestor.com's. This is our daily brief recap. Actually, I got the Broiler Chickens intro all messed up yesterday, didn't I? Oh, well. Probably not the best showman, but if it's one thing I absolutely love about what I do is I have a passion for the market, so I'm here day in, day out. Hopefully you're hearing the same things over and 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 over, and maybe if we're lucky, some stuff is sinking in. Our breadth indicator, and is the one good thing about building half decent technical tools is the message really shouldn't change a hell of a lot from day to day. And then when we do get market pivots, they should be noticeable. As you can see here from our little breadth indicator here, we're still firmly pointing down. So there's not a hell of a lot to get too excited about in the risk market right now. I see major indexes and stuff jumping all over the place, but like the Dow right now is around 30,000. We used to have a rule that you really can't interpret anything in price action unless you see at least about a 2% movement. So 2% movement on the Dow at 30,000 means, really you don't even pay attention unless you see about like a 600 point movement in the index. And interestingly enough, I think that's just about exactly what we sort of saw last week. And then things sort of, calm down again, and we sort of head back up top end of the range. So for the time being, it's sort of like... we're heading right into the eye of the storm of a massive, 20, 30, I guess 40-year cycle. We, on Mondays, once a month or so, we have one of our site OGs, Jamie, out of the UK, come on and do a presentation about fundamental analysis. And... clearly, the fundamentals are all over the map here. And on top of that, the bankers who are basically running this world, they're changing the rules as to valuations as we go day by day. So our simple message, I think, coming out of today's broadcast was we can't even really discern about new trends in economies, directions that we're headed. They say the trend is your friend kind of idea. I would imagine probably not even for the next probably easily a year until we actually start seeing crystallized W starting to come in on like weekly and monthly charts and real breakouts. Fun, party, woohoo! And then of course, like I said, because the bankers have gone and changed the rules on us, how do you actually even figure out what the hell value is? And I spent quite a bit of time yesterday through the Broiler Chicken Show just talking a little bit about how stock markets, they're not really at new highs here. Yes, the printed number in the newspaper new highs, but if you take into account the dilution of this thing that it's priced in, these dollar things here, actually in reality, our economy looks actually something like this. So, take price action for whatever it's worth. This is going to be a difficult transition. And I had sort of said that I wouldn't be surprised by the end of this year that a lot of classic economic models come into serious question. And things like market timing and, try to keep yourself honest. We have a major political event coming up in the United States of America, being the hegemony proxy. Obviously, massive uncertainties all around this. And that's our backdrop. It's a challenging time. No doubt about it. I was joking because Jamie, who I was referring to there earlier, he came to TRI back in 2016, 2017, when the trends were fairly easy to discern. As we go through these transition windows, what does the baby boomer world look like versus what does the millennial generation world look like? we might have to go through a couple years of, oh my goodness, everything's just swimmy. There are no real trends, and price volatility is all over the place. Guys like Barstool guy are going to look like geniuses just going 100x, grabbing bottoms. And then, when the market gets a little bit of sanity, they all get flushed out. So go slowly. Take your time. Try and figure out what value is. Value here is critical. Like if I see a company that's not carrying any debt and it's trading at more than what the cash is on the books, that's value. If I see a commodity trading at or below the cost of production, that's value. Aside from that, be very careful with your hard-earned money. This is a dangerous time to be in the risk business. Wow, there's a fun start to your broadcast. And unfortunately, this message is probably going to be consistent over the next, heading through the February, March, that's sort of where it started. I think, for whatever it's worth, and it's just my opinion, that we're going to be handed another interesting buying window probably about a week or so ahead of the U.S. election. And around that sort of celestial pivot event date that I'm looking for in middle of November. But until then, be very careful here, folks. And what I'm also worried about, too, is, if we get another big orgy swath of buying in the tech stocks, you might actually create a crash scenario here the middle to the end of October, because that's exactly what happened in 29. Markets sort of tried to get its act together middle of September, and then all of a sudden another massive wave of upside came, took us up into October. I actually heard somebody say today that tech stocks are now the new value stocks. Oh, goodness. It's got disaster written all over it, but so what? It's just Brian's opinion. I'm going very slowly through this period. I'm not betting the farm. Love dollar cost averaging on out of favor names. Slow and steady wins the race. Your sort of market summary for the day. I get the feeling that Monday, especially following sort of last week's kind of meltdown in equities to a certain degree, more so probably in tech stocks. I get the impression you can see U.S. dollar index coming out of the gate here, heading down. We got some news out of Europe. Things like AstraZeneca is going to start getting the COVID vaccine work going again. So that's added a bit of a bid to the risk part of the market. Interesting. We talked last week about bonds and what were they going to do off of this tight consolidation. They've actually tried to move higher here, but as stocks appeared to catch a bid first thing this morning, they kind of stalled a little bit. Very curious about our gold here, right? I think gold is sitting here waiting for crude oil's move. Because as I said, U.S. dollar index out of the gate, this should be a risk-on bet. But notice, there's no interest in buying crude here today. And, for whatever it's worth, cycle in, cycle out, I've always noticed that crude oil always leads. Crude oil came out of the bottom first in 2008 financial asset crisis, all that nonsense. Crude oil came off its bottom in 99 when the big pivot happened, 2000. I've seen historically crude oil energy, right, as just a simple bet, often leads. But at the same time, too, and actually one of our Australian site members sent us an interesting news article from British Petroleum. You've heard me talk about how I'm not really interested in oil anymore. And how I think it's a 20th century story. But on top of that, we're moving out of the commodity cycle and we're heading into a growth cycle. So the last thing in the world I want to be doing is buying commodities right now. So BP actually just came out and said that we don't actually expect world demand for commodity to exceed what we saw there pre-COVID. That's probably it for the demand for oil. And it makes sense. I mean, here comes Mr. Monks with his gigafactories and all that kind of stuff. But we're moving towards electricity at lightning speed here. I also think too that what I find really fascinating is how Mr. Musk has decided to translate his battery technology and the storage of electricity to households, and how he's actually trying to tap into the electrical grid there to actually have people who buy his sort of house charging units actually get paid by utility companies to feed energy back into the grid. So the writing's on the walls. I mean, it's coming 100 miles an hour. For the crypto people that like to watch this channel, there's a guy, Crypto Chico. I think his name is Tyler. I respect the work that he does. He was the one who called that link bottom there, and his whole following should have done very, very well off of that pick. He did an interesting piece recently that I think is worth watching on the mechanics of Mr. Tesla moving into the utility business now. So my hunch is, that's sort of dirty. Also, too, you noticed J.P. Morgan comes out with these $1 billion green fund, bond funds, blah, blah, blah. You can see it coming 100 miles an hour. I guess the point that I'm trying to make here is, on top of the fact that I don't like crude oil, I don't like energy proxies in this form. I mean, I suppose solar energy and Mr. Monk's electric gig factories, all that kind of stuff. That's probably our future stuff. But on balance, what I've noticed is if growth is really coming back in earnest, we often see it expressed in the energy market first. And I'm not seeing much of a bid here in crude oil today. And like I said, BP came out and just sort of punched the crude oil market in the nose today with that rather sanguine outlook. Having said that, you remember our fun little conversation here, picking tops, as someone colorfully commented recently. And actually, I really like this short trade now because looking at I guess it's the December futures contract. I think actually this was the trade, but oh well. Hindsight's 2020. We had said that this was our fourth attempt, I think, to try and pick tops on crude. But we did, for the purposes of this video and walkthroughs and stuff, we did claim that we shorted this double top up here. And we're just working this trade idea away. My general message would be here, don't let a winning trade turn into a losing trade. And what I'd ideally like to see here is a little bit of back and forth, create some new market structure, and we just simply move our stop down as new structure comes in. So that will be the goal to see how this goes. And I think our ultimate objective was just nothing more than a 50% retracement off of like a realistic range. Obviously, using this number doesn't make any sense. And actually, I think probably the easiest way for you to see it, and I think I had, don't know whether I did it on this screen or not. I did it over here. I think the trade, let's see, did I write it up? Yeah, there it is. So I think the trade kind of looks like this. There's 50% level. We use that as a profit objective. If that's hit, great, awesome. We'll tally up the totals. Remember on our paper trade, we tried to short that, and then I think we tried to short that, and I think we tried to short that, and now finally we got this working. So we'll tally up the totals and see what the damage was at the end of all this. But it's kind of a fun sort of walkthrough. Anyway, I do believe that a short is working on the crude market now, and it's just really a question of, do we start making lower highs and lower lows, trend continuation, or do we go and bottom out here, which you can clearly see the market's trying desperately to do, and rally back up into resistance. So we'll see how it goes. So I guess my message here, I think, is we should be in a risk on environment with the US dollar index coming down. It looks like stocks are catching a bit of a bid, but I'm actually a bit surprised why crude is just stalled here. And it's interesting how it's almost like the gold market, because I often say that gold and oil usually move in opposites. And it appears the gold market is also sort of stalled here, just waiting for a cue. I get the feeling if crude does break here to new lows and we start working our way lower, the gold's probably going to take off here. That'll probably also mean that the stock market weakens and the bond market strengthens here. So we'll see how this goes. No real new signals here today. Just slow and steady. Probably another testament to the risk-on environment. You can see junior stocks are catching a bid relative to senior stocks. But, this kind of image is actually exactly like our breadth indicator here, right? It almost looks identical. So, on balance, the broader market, you can see, broader market really isn't that happy right now. But I'll tell you, we continue this and then we pivot up into that early November period, I think we're going to get one hell of a buy signal here in the market. But it's just not here right now. That's basically what that's the message. Unfortunately, am I banging out any doubles on anything today? No. It's kind of a, could we counter trend rally back up into the top end of the range on stocks and on oil and on Bitcoin? Sure. Our risk on proxies, those are them, right? Stocks, oil, Bitcoin. And you can see that they look very, very similar here. We zoom in on this daily Bitcoin chart, you should see a lot of similarity here. So dump in stocks, a little bit dead cat bounce, dump in oil, dump in Bitcoin, a little bit dead cat bounce. And you can see actually Bitcoin's leading the charge here. Unfortunately, when we analyze the market here, and we'll just jump over onto Bitcoin now, I suppose. I like to think of Bitcoin as a leading indicator still in the market. Our risk on, risk off picture that I like to put out to the public. This image, I like the idea that Bitcoin's a leading indicator here. So I wouldn't be surprised the fact that Bitcoin has gone and W'd here. I wouldn't be surprised if stocks push their way higher. And I wouldn't be surprised if oil is dragged back up here. It's interesting, though, gets a bit scary, right? Where we've got gold moving up, we've got bonds moving up, we got yen moving up, we got Bitcoin moving up, we got stocks moving up. The only one who's not really participating in the party today appears to be oil. If oil does just flounder here and actually start to roll over, my hunch is these guys are going to roll over here. But, considering the way Bitcoin has bottomed here, and I still like it as a leading indicator, I don't think that these are going to break here, but we'll see. Like I said, what I'm really interested in here is why is risk off catching a bid here when this really should be a risk on day. I think it's a testament to this year. This is a screwy freaking year, no doubt about it. I get the feeling that the whole damn market wants to melt up into this election event. Mr. Trump's making a little bit of a comeback here. I am hearing more and more talk about how this is turning into a tighter and tighter horse race. I don't know whether Mr. Trump's got a chance here. Still 5 and 6 for Joe Biden. This is off the Economist website. And I like these guys because they look at a whole bunch of different polls. So they're not really just watching one. It's interesting. I think what's happened here is basically those people that have sort of committed, they've basically committed. And you notice that we're kind of flatlining here. I think there probably has to be debates. I'm not quite sure when the debates are expected to be handled. But I would imagine that debate and the perceived outcome of the winner or loser kind of idea is probably going to shift this. But for now, we're probably stuck here. They always say that basically how September, October goes usually is a pretty good indicator of what the market thinks who's going to win the election. So if we go back to our good old S&P chart here, it doesn't really matter. You can take the Dow. They're all the same. Knee-jerk reaction is incumbent loses. I don't know. Maybe Mr. Trump, you notice we have a nice little inside bar here on the Dow. Maybe we can ratchet back up and the market believes that Mr. Trump's got a chance. Probably, yeah. If you see the stock market break to new highs, then it probably means that that gap is tightening. But we'll see. Only time will tell. Do I really have any kind of new trade here? No. It's just, I get the feeling that probably the best thing to do is really not a hell of a lot over the next month, month and a half. Just be careful here. There could be some nasty surprises in the market. I mean, there's no reason why this couldn't ABCD its way down below. We're, if you just look at this Dow chart, is that the kind of place where, a good old Brian would say, oh, yeah, come on in and invest. This is totally risk-free. Goodness. I mean, really, I might argue that this is all open air down in here. So all somebody has to do is sneeze, and oh boy, I mean, you see, sneeze, how appropriate, eh? So I don't know what's going to happen here. Nobody does. Nobody can predict the future. Trade your setups. I think you can actually see fairly easily there seems to be a bit of a fractal top forming here. So again, as we said, if we find that this little counter trend rally here stalls and it rolls over, I think it means that whatever inertia behind Mr. Trump, COVID cases, all that kind of stuff, things are getting uglier and more uncertainty, blah, blah, blah. So, if you see this pattern develop, better run for the hills. I don't think it's really in any of our best interest to try and predict this. You just don't know what's going to happen here. I think probably if we do lose this recent consolidation low, then we can start drawing things like head and shoulders is, right? And if we do break through that low, and I'm just sort of having fun here playing, my hunch is we're probably going to have to come back down into those July lows. Seems reasonable. If all hell breaks loose, I mean, like I said, this is all open air. I don't think all hell's going to break loose, but so what? That's just Brian's opinion. Usually if I say, oh no, all hell's not going to break loose, all hell does break loose. So, like I said, trade your setups. Opinions don't really mean a hell of a lot. That looks very fractally. And terrible place for me to go, oh yeah, I'm just going to go and invest my hard-earned money and take my shot. That's horrible. But oh well, that's my money. I mean, you do with what you're going to do with your money. All this is edutainment, remember? Okay, so back to our conversation about the corn. Usually, we can't really decide the health or ill health of a market move until we have 38.2s tested and resolved. Interesting. Well, there is 38.2. It did its job. I'm a big fan of the volume profile. And when I was actually, and probably better just to, something like this, just look at the distribution of the volume here. And what I notice is there's a big hole in the profile here. And actually, this is what we used to affectionately call the claw, right? So you go, rah, 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 rah. Terrible claw. Let's try that again. I'm not a very good drawer. Anyway. That's even worse. Anyway, we're in the claw right now. And my hunch here is we're probably going to do a bunch of backfilling to fill in the profile here. In fact, usually what we like to say is this what's called a muak, where the price wants to kiss this level. So that's basically what's going on right now. Is this a buy signal? Nah. I suppose if we drill down to lower time frames, I think you could probably see like head and shoulders is shoulder, neckline, head, neckline, shoulder, away we go. It's pretty aggressive considering we are staring at an M right in the face. Oh, there you can really see that claw now. Actually, there's a really great image. Let's see if I can do a better claw here. Something like that. And then put your eye right here, and he's going, rah, look at me, and into my teeth. Rah. Now he's a fish. Crazy Brian. Anyway, point of the matter here is I get the feeling we're just going to sort of settle in right in here. If anything, this is a great testament to... well, I like to use W.D. Gann. Mr. Gann here, his 1 to 2 angle. I think the market is still playing with this angle right now. And you can see how we lost it, came back to it, lost it. And now we're just kissing the underside of that angle. So I think that's probably what the market's playing with right now. I think as I've said before, ironically enough, for a guy like me, the trade, of course, comes in trying to short here. Do you take profits into here? I think I told you on ETH we bought some put options, and those did well when ETH dumped. Now we're sort of right back at sort of middle of the road kind of idea. Not really a good place to buy, not really a good place to sell. Candle body lows as trade location. If you were hunting longs, I like the idea of snooping in and around down in this area here, right? And if you do reload zones off of that range, that'll be down in that area. You can see I even put like a little question mark because off the lower time frames, there's some suspicious activity down here. Right, if we go down into here, so you can see this crazy ass tail that was made here. So clearly there's a bunch of people that went short here. Sell, or sky's falling. They're all trapped now, so they would love nothing more than to get released. So I just sort of said, if you're thinking about being a buyer, right, down in this area is where, sort of cheap, if you will, relatively speaking. Probably if we do, if you are thinking about hunting that long, probably something along there. And there's your reload zone, 61.8 to 78.6. Good old Kavarkinator sitting down there at 88.6 right in that tail, and that's below value. So Mr. Hoagland, he would be interested there. And again, not really a trade I would consider because, hey, we got this big honking M staring us in the face off the higher time frames. Yuck! So I can't really get too bullish in the face of this. If anything, what I would prefer to see is the market rally up into reload short zones, going M out, lose this Gann angle, and we set up one hell of a short trade. But that's very far away now. Probably the market you really want to sort of, what the hell is going to happen here? It's interesting how the shit perp index looks like this. A little bit of a W came in, counter trend rally, that same sort of conversation. The W's came in through the weekend, counter trend rally coming up into the tops. So is there any part of this market that really is in focus right here? Obviously, DeFi. So I kind of like how they put together this little DeFi perp index here to give us sort of a reading on what the hell these guys are doing. I don't know whether it's really accurate or not, but it seems to help me just understand what's going on technically in this space. Pretty healthy bull market. I'm not going to bullshit you. Higher highs and higher lows defines a bull. If you guys could get in, and this index obviously isn't that old, but, hopefully you see down, breakout, down, up, down, breakout. Even just slightly in here, down, up, down, breakout. Oop, looks like there was a little M. So you can see this little W was negated by that M. Wash the stops. Then we do it all over again. Probably a reload zone through there. Blah, 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 blah. If you see a chart that goes from the lower left all the way to the upper right, the first thing you should always do is throw on a 50% roll. Because this is what naturally should happen. So you could actually make the argument that at this point, hey, maybe we went a little too far. And sure enough, I like to use this crazy reload zone concept. And if we do a complete range study, that's this box. If we just do it off of this low, that's this box. And anytime you get these overlapping reload zones, wow, they are sure sexy trade location. I'm not telling you, hey, this is setting up a trade. Hey, go and buy this. You make $1 million. You should all just take a screenshot of that, print it out, put it on your wall, and just tell yourself, when you see overlapping reload zones, it usually is a pretty sick trade location. Proof of the pudding's in the eating. Do it yourself 100 times over, and you'll start to understand what I'm talking about here. So, you want your little value piece for today. Overlapping reload zones are often really kick-ass trade locations. And as you see, if you had the kahunas to step in down in this area, you're doing pretty well right now. I think probably just exactly the same as 50% rules on the downside, we can use 50% rules on the upside, same conversation. So I think what ended up happening here, of course, everybody went at all ape shit, DeFi tastes great, all that kind of talk. They, destroyed the weekend late buyers with this move down, very typical capitalist fashion. They brought the market back down to the original W, market structure bottom, right down in here somewhere. Down, up, down, breakout. So all they did was they brought the market back down to the original bottom, wherever you want to draw that. And they turned it back up. What a surprise. I mean, nothing really out of the ordinary here, folks. I think what's going on here right now, actually, this is a classic, what we call a 80% play, where it's bull market. I'm a bull. If we accept back into value, and you notice up here, hey, not a lot of new buyers came in. This profile here, this colored area represents where 75% of all sort of business was done. So up top here, especially looking back in hindsight, you can see there's not a lot of business done up here. So the rule is that if we accept back into value, and you can see the market came back down, tested value high here, right, all through here, rallied back up, and then collapsed. So the rule is if we accept back into value, which is what this is, 80% of the time we should go tag the other side of value. So in this case, that was basically down here. So, I mean, it doesn't necessarily set up a trade, but if you see the market above value and then come back down into value, 80% of the time we probably got to come back down to value low. And that's basically what happened here. I think you can make the argument going exactly the opposite direction now. Market's below value. Market puts in a W, accepts back into value, so 80% of the time, you should be able to tell me exactly where this market's going. 80% of the times, not 100%, but 80% of the time. And that's right back up here. That would not surprise me one bit. Now, is it going to do it in a straight line? No, the market never moves in a straight line. We might have to come back down, test the bottom of value again. Notice there's a hole. Remember I talked about the claw and muox. Hell, we might have to come right down and eat this tail again. That could happen. But generally speaking, if we have accepted back into value, we should come right back up to the top of value here. So my sort of thought here right now is right here. Is this a good place to place new bets? And I think the answer is no. You can see we could easily go down that far. At the same time, we could easily go up that far. So that creates almost like a 1-to-1 risk reward. Well, I'm not in the business of just taking equal size risk reward bets. There's no edge in that. I mean, basically it's like 1-to-1. You got a coin, got a Bitcoin, flip a Bitcoin. Heads I win, tails you lose. That's not really an area where I want to take a shot. Interestingly enough here, from a statistical perspective, if and everybody should know, I don't know why I can't get rid of that. Anyway, everybody should know that if this is a range market and I short up here against these highs, you should know roughly about 70-80% of the time, the market will come back down and test the bottom end of the range. Same thing. If we come back down to the bottom end of the range, and this is the trading range, 70-80% of the time, we should go back up and test the top end of the range. Now, that's an edge I can trade with. Right here, 50%, either I win or I lose. There's no edge there. So this is just like Bitcoin. It's just like the junior stock market. It's just like the stock market in general. I think a lot of these assets are very correlated. Risk is highly, highly correlated right now. If you want to use something like this to tell you sort of what the temperament of risk is, fine by me. As it stands right now, I would just simply say it's actually fairly cut and dry for me. If we go and, I'll just sort of freehand this. If we go and fractal out here and lose these lows, you can see it's going to be a loss of this trend line. And probably head and shoulders. We have to head back down here, right? Equal distance. That makes it fairly simple, right? Lose those lows, and we're heading back down to the soup. If we can somehow go and maybe even crazy, call me crazy, make 3 higher lows, 1, 2, 3, well, then we can start botting our way and thinking about AB equals CDs that can take us back up top, right? Something like, I'm just freehanding this. If that is the low, right? 1 low, 2 lows, 3 lows, bot fires, somewhere in here and take us back up to the top end of the range. Mr. Hoagland's happy. But for the time being, it's just like Bitcoin, it's just like Ethereum, it's just like the stock market. It's very hard for me to come up with conversations to have with you guys, and to tell you, hey, I'm buying this or I'm selling that, because right now I think we're just sitting in no man's land. And there's just not a hell of a lot for a guy like me to do right now. So, there you go. Merry Christmas. Happy Hanukkah. Little ones that I've been nibbling on recently, not doing much. Decred right back down to the bottom end of the range. Could even break these lows. Totally possible. Not in a hurry here at all on any of these. Geo, same thing. I got bids working down below. I'll be more than happy to buy some more. Picked up some Dash. Nothing really to get excited about. Sia, same thing. There's only one swing trade that I put on here recently, and it will be the only one that I'll tinker with if things start to break down in earnest, and that's this OMG. Interesting. So some volumes coming in here. You can see names like this go right back down to where I bought it. Same thing on the Power Ledger, right back down to where I bought it. But this OMG, I took a little bit more of a sort of, not really value trade, momentum trade. Like value would be hunting down here. A little bit of a momentum trade, looking for that pushback up top on this little guy, and you can see, kind of stalled. Nothing to do here trade-wise, but you do see the sellers are starting to accelerate a bit. I mean, hell, if this can turn back green, then hey, maybe we got something to work with. As it stands right now, just a big hurry up and do nothing. And I might have to book a loss on this trade. Totally possible. It's trader's life. So that just gives you an update. And, whether it be junior stocks or whether it be crypto, a lot of anything that I bought recently looks exactly like this. Just a big hurry up and do nothing. So there's your market state. Not really exciting. Not really face rippy. Not really face rip downy either. Just a big hurry up and it's a Monday. And if you want sort of like a temperament of sort of the trend in crypto right now, I'd keep an eye on things like this DeFi index is probably a good way to sort of, follow along the DeFi soap opera. All right, I think I'll leave the broadcast at that. Sure hope you got some value out of it. Probably talked way too long, but PMA for the win. I think we got another day or two left on our funny little promotional deal that we're doing here at TRI. So if you can, take advantage of these discounts and promotional packages that the marketing team put together. And Julian actually doing a fantastic job on the back end customer support. So if you do have questions, feel free to reach out to him. And if I happen to see comments and tweets and stuff asking questions, I'll try and help as well. So, All right, I think I'll leave it at that. Have yourselves a great day. Oh, somebody asked about the 30-day free trial. There you get even a nice picture of me 5-10 years ago. Somebody actually looked at that picture and said that looks like a sex offender. Does that really look like a picture of a sex offender? I don't know. Well, I thought that was kind of amusing. Trolls will be trolls. All right. Have yourselves a great day. PMA for the win. All the best and bye.